All right, everybody. Happy Monday or Tuesday, whenever this video comes out. This is Arthur Petropoulos, managing partner here at Hillview Partners. And today we are joined by Daniel Tagliatela, who is an up-and-coming entrepreneur, owns several companies. We actually had the pleasure of working with Daniel and selling a business from one of our clients to him. And I know in the previous video, we had an interview with a private equity managing partner, thinking and talking a little bit about kind of how the institutional capital side of things looks at deals. And in this market that we are involved with, there's a lot of financial buyers, a lot of strategic buyers, and kind of running the whole spectrum. And so today we wanted to interview someone a little more from the entrepreneurial side of things, a little more bootstrapped side of business ownership and acquisition, and to subject him to a pelting of questions over the next hour that he's kindly said okay to. So, Daniel, appreciate you joining us in today, and I'm looking forward to the conversation.
Great. Glad to do it.
Awesome. So Daniel does not possess the same bad Rhode Island accent that I do. However, he is a local as well, or native, let's call it. So it's always good to chat with someone from the homeland. But
Yeah.
if you don't mind, Daniel, just for everyone tuning in, give a quick intro on yourself, about you, where you came from, and kind of, dig more into the specific deals and businesses, but a little bit of the path up to kind of the point of entrepreneurship.
Sure. So like you said, I was born and raised in Rhode Island. I went to like primary school here and high school and even college in Rhode Island as well. I went to Bryant University. And right after college, I started at a job at an insurance company in their investment department. And the name of it was Amica Insurance. They're in Lincoln, Rhode Island. And they had an internal investment team that would manage the public stocks and bonds for the insurance company. And I was on the public stock team. So I spent 4 years there researching companies and basically making recommendations to my boss about stocks that we should buy or stocks that we already owned if we should sell them. And so I got good training there. When I was in college, I studied accounting, and they say that's the language of business. So that gave me a good quantitative background for reading financial statements and being able to decipher kind of what's going on with companies. And so I spent 4 years at Amica. It was a great experience, but ultimately, since I was a kid, I've never really done well with like working under somebody else or having too many authority figures over me. So it was kind of inevitable that I was going to do something on my own if I had an opportunity. So I've always been pretty frugal. So I had a lot of money saved up just from working odd jobs and working at Amica for 4 years. And so at the time I was 26 or 27. I quit my job with the intention to buy a company. And I just figured it was kind of like the same thing I was doing. Instead of buying fractional pieces of large companies, I would just buy an entire small company. Instead of buying 0.001% of the stock, I just buy 100% of the stock. And so that was kind of it. I quit my job, spent a year looking at a bunch of companies in Rhode Island, Massachusetts, and Connecticut. I ended up signing about 100 NDAs. I submitted one LOI and ended up buying that company in Connecticut. So I packed up my bags, moved down to Connecticut, and that was the beginning of it.
Good for you. And, I think it's an experience we all had when we start a business. But do you have a particular moment that, because it's always interesting when you hear about someone's kind of like, I've had enough moment, or like the moment where they finally burn the ship and say, okay, that's it. But do you remember a specific moment that you said, okay, job's done, and now we're into this next chapter of life?
For me personally, it was when I was born. I had enough. So it was in school. I was always, I didn't like teachers talking over me and telling me what to do. And when I got to Amica, I really liked the job and what I was doing. But if I wanted to buy a stock, I wanted to buy it. I didn't want to have to like even ask my boss and convince him. So it was basically when I have enough money, I'm out of here to,
Sure.
to do a transaction of size. So when that happened, I just walked in and told him I quit, and that was the end of it.
I trust they begged you to stay.
No.
Don't worry, it wasn't here either. But all right. And so now the businesses that you own, one is a driveway sealing company, one is a window cleaning company. Did you have the angle when you first started of like what industry you wanted to be in? Did you like home services? Was it just something that piqued your interest as you were turning over rocks, or how did you get into the space?
No, I would look at anything. I was completely generalist and opportunistic. So, like I said, my first company was 100 NDAs I signed, and I looked at every type of company. And the driveway sealing company that I ended up buying, it sort of checked off all the boxes that I thought would make a good investment, and so that's why I pulled the trigger on it. And then with the second business, the one you sold me, frankly, I wasn't looking for another home services business. Again, I was just open to anything. So
Sure.
this came across my desk when you called, and it looked like what I was looking for. It was nice that I already had kind of a similar experience, so I had a little more visceral response to it, but I didn't let that override the criteria that I had. So it fit everything I was looking for.
Understood. That makes sense. And, I have the poster on the wall of the good, the bad, and the ugly, but you certainly see it, as I'm sure you did with your 100 deals that you looked at. Because people think the buying of businesses or the broker, being an investment banker, whatever side of it that we're on, that it's kind of this glamorous thing.
No.
But, but I remember when I first started, we one time looked at a company that was a distributor of secondhand store mannequins in New Bedford, Massachusetts. And so there's this 100,000 foot warehouse just filled with mannequins. I mean, it looked like
Man.
somewhere where like a Bond villain would hang out. And I'm
Yeah,
standing there
yeah.
in the middle of the day saying, what on earth is this? I'm sure you looked at your fair share of ugly ducklings, let's call it.
Yeah, yeah. Most of them were.
Yeah. But I guess in that, we always say kiss a lot of frogs to find a prince. But when you're looking at a company, so we always kind of break down companies. We always say product, people, processes, right? And so when you look at like the fundamentals of a business, so say someone puts a business on your desk and you say, is the product or service they offer good? I guess how do you determine that? Is it just saying like, well, they're already making a lot of sales? Well, it makes logical sense. Or when someone says like, we're the best service provider of X service or the best product maker of X product, how do you kind of go about evaluating the product side of a business?
So the first filter that I look for is that the financials over a long period of time need to prove that it's a good product or service.
Sure.
So if they don't have the numbers on the board to demonstrate that they have a good product or service, then I don't try and explain it away and come up with ideas about how I'm going to make it better or anything
Sure.
like that. So that's the first filter, and that's probably 75% of it. The next 25% is trying to understand from the customer's perspective what this product or service is actually doing for them,
Okay.
and trying to come up with how important or unimportant that is, and then the dynamics around the decision to buy the product or service and what the customers really care about in those situations. And then I kind of parse that out partially just me thinking about it. So
Sure.
in my two companies, I mean, I can understand, I know what a driveway is, I know what windows are, and I know what dirty windows look like. And so you kind of think about it on your own. But it also comes out when you start talking to the company themselves, and those people that work there and the owners, they'll give you a lot of insight if you are astute and asking the right questions and everything. And then ultimately that's kind of how you make a guess, I would say.
Sure. But you're right. I think history or prologue certainly mitigates a lot of that risk, right? We're
But
not
this is in my situation. I came from an investment background. I've never operated a company. I didn't come from a specific industry. Like if I was going to buy another window cleaning company or a pavement sealing company, I'd be a lot more, I don't say intelligent, but I just know a lot about it now. So
sure.
I'm talking about from the perspective of somebody who's a generalist, not somebody who has sector expertise.
Sure. But that's what we always say to people too, is like there are companies we've worked with that say do a lot of revenues but are not terribly profitable for one reason or another. And when we go to position those companies, we go to people who are subject matter expertise or who have stuff under their belt. Because if you were looking at a window cleaning company kind of ad hoc, or even let's say the first company you bought, if you were just looking at it, I mean, you got to say, look, I don't need to be a genius for this to largely go in the same direction that it's going, that we can at least extract what it's producing right now, and then hopefully we can optimize it. But as you have the understanding of all the nuts and bolts, if we were to show you a company that does X revenue, I bet you could just look at the operating expenses and be like, all right, well, you could save money there, you could make more money here. Here's where your pricing's off. So I feel like you have to get one thing that at a good value that looks clean and makes sense. And then after that, you can kind of look at progressively more idiosyncratic situations and kind of just imply what you could extract from it.
But you got to be, that's a very highly skilled,
Yeah,
you have to really know what you're doing if you're going to do that.
correct.
But yes,
Right, right. And so that's what we always tell people, like, because we've had people come to us and say, I'm going to buy this widget manufacturer. It doesn't make any profit, but I'm going to make it the greatest thing in the world. And they say, well, that's a dangerous bet to make, right? Like, buy something that works, understand it in and out. Everyone can be incrementally slightly less pretty, and you may
yeah,
still be able to make it a win.
yeah.
But I know what you mean. All right.
It's also not going to close for you probably if they don't, if the experience, if it doesn't match up, it's probably not going to make it.
Yeah, look, and that has to be obviously a handicap component of everything too, is that spinning wheels doesn't make any sense for anybody, especially our
Yeah.
clients. All right, so we think of kind of the product side of it, and then we always think of processes. We really break, I mean, there's administrative elements of it, but really think of it as kind of like sales and execution, right? The sale of the thing, product, service, or offering, and then the fulfillment of the service or making of the product. When you kind of step into a company and look at the sales machine or lack thereof in a particular business, how do you kind of analyze that? Is it like total addressable market? Is it just what do the leads look like? What's our customer acquisition cost? Are there any metrics that you use from the sales side to kind of step in and say, is this working or not, or how could it be improved?
So when I was at Amica, the sell side analysts, Wall Street, would frequently put out reports with a lot of industry data on particular things.
Yeah,
And total addressable market, how big's the market, who has the market share, is it growing or shrinking, who's going to gain or lose share. This was a big topic. I have always been suspicious of those figures. And so now, because where does that come from? Now that I'm in a business like in the pavement sealing business, there is a trade magazine that once a year they put out those type of numbers, but all of that is self-reported. So I don't tell them my sales. So I'm a private company. How do they know what I'm doing? So I look at these numbers and I just don't even really pay any attention to them because they could be wildly off. So when I'm looking at a company, it's almost just common sense that I'm saying, okay, how many driveways are there? I can look up myself how many households are in a certain geography through the census. And so I say, okay, there's 20,000 households. They get from the street to their house using a driveway. In this area, they're mostly pavement. They're not concrete or cobblestone, maybe some gravel and things like that. But you can kind of just triangulate it. But you're really just trying to get in the direction. I'm not trying to get it down to the decimal place
yeah,
with this stuff. So another thing is I heavily lean on what we already said. I mean, if the company has a long record of sales, then I know they're doing something. So one of the questions I just asked the owner is like, how do you get work? Where does it come from? And part of the time they're just like, I don't know. And then another part of the time they have a really good answer for it. But a good or a bad answer doesn't really mean anything. I mean, if they're not doing anything and they have a phenomenal track record of sales and, moderate growth and everything, then that's an opportunity because you're coming into something where like at A&A, they spent $0 on advertising. The company's been around, legend has it, since 1930. You can see that in the financials that they never spent any money on advertising. So their customer base is largely recurring and largely word of mouth. And I didn't view that as a negative. I viewed that as a positive. Like, wow, if I come in here and I start juicing it, what can we do? So the other company I bought had sort of a process for gaining customers. It was a process for accessing repeat customers over time to make sure that the business was recurring, but they didn't have a new customer process. And so that was something we added over the past 6 or 7 years. And so it's worked out very well. But those are your opportunities.
yeah,
So I would say it's just talking to the owners. It's just talking to the key people and asking questions and not hearing what you want to hear, hearing what they're telling you.
yes. No, it makes sense. And I agree with that sentiment though about untapped paths because even clients will talk to us and say, do you think it's going to be detrimental to our sales efforts because in terms of exiting the business because we only do sales through print marketing, we only do sales through direct email, like we only do one channel or two channels. We'll say no, that's where the opportunity is. Like the thing we don't want to tell people is like we're maxing out
We're
every
maxed out.
channel
Yeah.
and nothing's happening because that's
Right.
more indicative that the product
Right.
service or offering it doesn't have a good product market fit or no one wants it. So
Yeah.
if someone says we're doing no marketing and we get all this business every year, it means there's some there. But
Yeah.
good stuff.